So now let's first look at income from continuing operations. US GAAP does not require a specific format or layout for the presentation of income from continuing operations. However, there are two general approaches here. One is called single step. The other is called multiple step. We kind of mentioned it just several minutes ago, but I'm going to talk about it more in a minute. But before I talk about it, please look at the 5 income statements that we have. And can you identify by yourself first, which ones are using single step, which ones are using multiple step? Please take 5 minutes and you can pause your video for now. So for the 5 income statements we have here, Starbucks, is a single step or multiple step? Starbucks is using multiple step. So why? Because of total net revenue, total operating expense, operating income. So all of those are characteristic of multiple step. The next one, Pfizer. Is Pfizer using single step or multiple step? Pfizer is using single step. So as you can see here, it has revenue, and then it is summing up all of the cost and expense. So all of the cost and expense are summed up together. And then income from continuing operation before income tax. So this number is basically the difference between Pfizer's revenue and all of those. So all of those are Pfizer's income, cost, and expense. Apple, is it using single step or multiple step? Apple is using multiple step. So why? Gross margin here. Operating income. So those are characteristic of the multiple step. Intel, single step or multiple step? So Intel, multiple step. Again, gross margin. So operating expense and then operating income. So all of those are characteristic of multiple step. Walmart, is a single step or multiple step? Multiple step. So as you can see, it is separating operating income from non-operating. So single step versus multiple step, what are the differences? For single step income statement, you should say that it is grouping all of the revenue and gains together, and it is grouping all of the expense and losses together, and then calculate income before income tax expense, net income, and EPS. So this thing, you are going to say it both for income, single step and multiple step. But this is the characteristic of a single step income statement. Versus multiple step, it is reporting series of intermediate subtotals. For example, gross profit, gross margin. So which is the difference between revenue minus cost of goods sold. If you are in a single step, those two, revenue should be grouped with all of the gains. Cost of goods sold should be grouped with all of the expenses. But if you see revenue minus cost of goods sold, so they're giving you gross profit first, step by step. That is multiple step. And operating and non-operating subtotals. So it is separating operating and non-operating income. So that is the single step versus multiple step. And then, yeah, so we kind of have showed a multiple step income statement before. And here is a single step income statement, which is basically grouping revenue and gains, expense and losses. So here again, it is a multiple step. You are going to say gross profit, operating income, and then income from before income tax, and then income tax, net income. So it is calculating gross profit, operating income, and non-operating items. And if you compare single step and multiple step, what is the advantage of a single step income statement? So it is simple. And then what is the advantage of multiple step? It provides more useful information because it's easier for people to say what is the gross margin, which is the directly related to the firm's measure. The gross margin is basically revenue minus cost of goods sold, which is directly related to the firm's sales. And then you are going to say the operating income part and then non-operating. So it provides more useful information for investors. And which one do you think is used more often? So the answer is multiple step. And then let's look at for a multiple step income statement. So multiple step income statement separately classify operating and non-operating income items. That is one of the characteristics of a multiple step income statement. And what are the differences between operating income and non-operating income? So what are the differences? Operating income includes revenue and expense directly related to primary revenue generating activities of the company. So for example, sales revenue, cost of goods sold, that is the mostly directly related to the primary revenue generating primary revenue generating activity of the company. Those are two items, revenue and cost of goods sold. Those are the mostly related. And then we have operating, sales, marketing, R&D, depreciation, amortization, as G&A. So those are also directly related, but those are not as important as sales revenue and cost of goods sold. Any gains or loss arising from sale of operating assets, litigation charge, restructuring cost, impairment charge. So those are in some way or the other directly related to the primary revenue generating activity of the company. However, for non-operating income, those are related to the incidental activity of the firm. So the most typical non-operating income, if it is not for a financial firm, is the interest income and the expense. So if I'm Starbucks, what is my major revenue generating activity, or what is my major business? My major business is sell coffee, make and sell coffee. And then if I have $1 million deposit in my bank, which is generating interest income for me, is those income related to my core business? So my core business is make and sell coffee. My core business is not making money just by putting money in the bank. So usually interest income and expense for a non-financial firm, those are non-operating income and expense. And the same as gains and loss of sale of investment. So if it is the gains and loss arising from sale of operating assets, that can be an operating income all expense. But if it is coming from gains and loss on sale of investment, for example, I'm Starbucks, I invested in Apple stock. That is not my operating income. Gains and loss on extinguishment of debt. So those are typical examples of non-operating income or expense. And then we have a practice example here. So we know the firm has sales revenue, cost of goods sold, selling expense, general and administrative expense, interest expense, gain on sale of investment. We know the firm has those income statement items and income tax rate 40%. Please prepare a single step income statement for 2016 and ignore EPS disclosure for now. Please take 5 minutes, try to work on this example. And you can pause your video for now. So here is the answer. It's a very simple single step income statement. So basically we group the firm's revenue and gains. The firm has sales of this number, gain on sale of investment. So we group up those two numbers. Those are the firm's total revenue and gains. And then we group up all of the expense and losses. And then including interest. So the total expense and losses is this number. And then if we add up 2,151, so if we take 2,151 and minus 1,506, that will give you income before income tax. So, and then we take 40% of that, that will give you income tax expense of 258. We take 645 minus 258, that will give you net income of 387. So that is an example of a single step income statement.